the key findings that, I mean, we don't have time to go into the detail of the report, so I will encourage everybody to read it. But could you give us a taste of it and an appetite, whet our appetite about this report?
Absolutely, Sandhya. Let me just share my screen here so that you can see. I'm just going to pull up really a few of the key findings here because, you know, I have this strong guidance to be brief because we really want to have an active debate today. And I'm actually very excited to hear from Her Excellency, the Ambassador of Ghana, about how she sees the situation there, responding to the findings, and also from Maria and the colleagues from EAS and the Commission about, you know, what we're doing to support African partners. So I really want to emphasize just 3 messages that come out of our results. And the first one is a positive one. We see that Africa's financial sectors have been really resilient. And I think it's fair to say here that we're seeing here the benefits of a lot of hard work and progress that has been made over the past few years. And African regulators and the financial institutions themselves should get a lot of credit for really professionalizing the sector. They've learned from previous crises, and they were much better prepared to meet this than they were in, say, 2008. So, you know, when we conducted the survey that Deborah mentioned in early 2021, very few of them even mentioned concerns about liquidity, access to funding. And this is because they had decent capital buffers in place when the crisis hit, and because the policymakers very quickly understood the seriousness of the situation they were dealing with, and they stepped into support. And we can see that on the slide here. Of the banks we talked to, 80% of them mentioned that they relied on moratoriums and restructuring to really give their clients a breathing space during the crisis. And that was with the support in most cases of the regulators. And we also see a large number of them, you see there on the slide, using public guarantees from government or from IFIs. So we really see the support coming through there. We also, as Deborah mentioned, analysed the situation in the microfinance sector, and we see a similar thing here. We see that there was a resilience, that we weren't running into liquidity problems. And in private equity and venture capital, we actually used data from the Global Private Capital Association, and we worked with them. And we saw that there was only a small drop in investment volumes during 2020. So we see that those funds have continued investing in Africa. They're confident about the opportunities. And actually, they were very quick to pivot to new opportunities that were coming up, such as in healthcare and tech. So there's a positive message coming through there. But my second message is, of course, less positive. You know, we're very worried, actually, and we start to really be concerned in some cases about asset quality problems because they're starting to crystallize. And the reason we're worried is not necessarily so much about the stability of the clients, but because we're worried that this can hit financing where it's most needed. So we know from enterprise survey data, for example, that African firms have been badly hit during the crisis. So over a quarter of the firms that were surveyed during the crisis in Africa, they were already overdue on their financial obligations, and 8% of them had filed for bankruptcy. So they've been badly hit by sort of restrictions on economic activity, restrictions on travel. And that was always going to translate into problems for the banks. And, you know, you see on the left-hand side graph, already in 2021, early 2021, they were very clear that the ability of their clients to repay was really their biggest concern going forward. And we now have updated information since we sort of finished the report coming out from the IMF and from CGAP and microfinance ratings, for example, on the microfinance sector, that sadly show that, you know, this was a realistic concern. And of course, the situation could worsen as policy support is withdrawn and moratoriums are phasing out, and as the external financing climate is becoming more difficult. And actually, in the microfinance sector, we had an update just this week from CGAP and MFR, and they see the risk of solvency problems emerging, particularly among weaker and smaller institutions. And that's just going to make it hard, even where these solvency problems are avoided, for banks and MFIs to focus on lending, right? So on supporting the recovery, because they're going to be needing to deal with these loans that are not repaying on time or that have to be written off at the same time as remaining stable, keeping, you know, their capital buffers strong. Of course, this problem isn't unique to Africa by any means. It's something we also see elsewhere, but it could be more severe because although there's been a lot of progress, we saw relatively high rates of non-performing loans going into the crisis. And also in Africa, we see the phenomenon of increased public debt, which is going to make it, higher yields on public debt are going to make it more attractive for banks to put money in those relatively safe assets rather than lending to the private sector. So of course, this is likely to hit access to finance. And even in early 2021, what we heard from the banks, you see there on the graph, 70% of them at that time had already tightened their credit standards. And I haven't pulled it up here, but when we talked to them, even though they were expecting a recovery in demand, the majority of banks, less than a third of them actually planned to relax the credit standards to accommodate that demand. And about a third of them said they planned to tighten further. And that can hit exactly where the finance is needed for the inclusive recovery. Because even before the crisis, we know there was a big gap in finance for smaller firms, SMEs. And the banks we interviewed confirmed this. They said, they were twice as likely to see lack of collateral as a problem for lending to SMEs than they were to see that as a problem for corporates, for example. So we know these barriers are there, and we know that that means that when banks are starting to lend again, they are taking a cautious approach. They're going to focus probably on larger firms, on better known clients. They can more easily understand and control the risks. And in the microfinance sector, for example, we have a particular concern because a lot of the smaller institutions are the ones that are most vulnerable. And those were the ones that were really hitting, really serving the most vulnerable groups, the poor, the people in the very remote areas who really have nowhere else to go for their finance. And of course, we are also concerned that this can hit even more so than SMEs in general, the groups that are most underserved, for example, women entrepreneurs, for a number of reasons. I think, this is something Maria can talk very eloquently about. And on the side of the private equity funds, we saw a very positive picture on the investment volumes in 2020, very resilient. But we did see a drop in fundraising activity, and that was because it was hard for investors to actually go to Africa. There were a lot of restrictions on travel. They couldn't carry out the due diligence. Even when the opportunities were actually there on the ground, a lot of them were focusing on larger developed markets. And that there's a big risk that this is going to cut down the availability of capital just where it's really needed to look to the future. So for innovation, for startups and for tech. So I think it's fair to say the situation is very challenging. But I wanted to end on a positive note because I think we shouldn't let all of this blind us to the really strong underlying economic potential in Africa and the fact that the financial sector has a really important role to play in a smart, inclusive and green recovery, and that the sector can play that role. It's ready to play that role if it can receive the right support. So in the report, we took deep dives into digital finance and green finance. And I think those are areas, I'm not going to go into detail here, but they really demonstrate the potential in Africa. So we know for digital that Africa has really been driving the digital finance revolution, even worldwide. And what we say in the report is that there's, the banks are increasingly moving into this. They've been pushed into this by the pandemic and they see the benefits. They want to serve their clients by digitalizing. And we think this can drive further improvements in access to finance and in financial inclusion. We also see a huge potential in green finance. It's quite nascent, but it can offer a chance for Africa to benefit from, favorable financing rates. And this is at a time when we all know global financing conditions are becoming much tougher. So I think this can be a really important source of support. And many of the banks told us that they were thinking about climate as a strategic issue. They were trying to mitigate climate risk. Some of them were starting to hire staff to focus on the issues, and a few of them were even developing specific green finance products. So the report goes into detail on this, but of course it's not going to be easy. And we talk in the report about some of the risks that arise and some of the barriers that need to be addressed. It's fair to say that those are considerable. But I do think that we're optimistic that, by working together, and that's what I'm looking forward to hearing about today, that, we can try and find a silver lining and make sure that finance in Africa is really contributing to this green, smart and inclusive economy recovery, which is really what we're all wanting to see. So I'll hand over now and look forward to hearing what we can do together to make that happen. Thank you.
Thanks a lot, Nina, for for this brief overview. When I'm listening to you, it sounds a bit like the person jumping off the roof of a skyscraper and then while falling saying, so far everything is good. Just waiting for the crash. So perhaps the question is how to avoid the crash that might be coming. Many questions that we could have, but let me turn to Rita Larangina. You are the Managing Director for Africa at the European External Action Service. And as a seasoned diplomat that has also worked, I think, in some of your previous experiences, on definitely on a lot of international relations, but also in Africa. What do you see as an opportunity for Europe to put development finance in its external relations, and what do you think in particular you can do to support the African financial sector?
Well, thank you very much. And first, thank you so much for the invitation and for the opportunity to be here together with this great panel. It's a female, all-female panel, which is really not common, but which is, I think, a very, very great sign of times. And I think that's something that I would like to highlight for a start. Also because I know that African women are also fighting the same battle that we are. Indeed, I work for the European External Action Service, so it's what here in in Brussels language, what we would call more like the political part of the institution, so like the diplomatic arm of the European institutions. And as you say, I've been a diplomat for many, many years, and what I've seen, not only in what regards the relations between the EU and Africa, or my own country of Portugal and Africa at the time, and now is the fact that nowadays everything is so much intertwined. We use, well, when I started in the diplomatic career over 25 years ago, we would only deal with political issues. We would only deal with the political situations, with the crisis situations, and we would leave everything that had to do with cooperation, with financial relations, with business part, and it was not part of our work. And today it is completely different, because we really understand that the relevance of international relations and the complexity of the relations between Europe and Africa and Europe and any other continent has to do also with the fact that, as Nina said, we really now have to all work together, and we have to join efforts to try to make a difference. And we have been well, very much highlighting in these last years that Africa is indeed a huge priority for Europe, for all the reasons everyone knows: historical, cultural, political, economic ties. And we really think that it has to continue to be very, very high on the agenda. And we are very conscious of the fact that now with the COVID pandemic and with this the current crisis, it is essential that we continue to work very much on the priorities that the Europe had identified as the main issues for work with Africa. And among them are some of those that Nina already pointed out to, that have to do with the green transition, that have to do with the digital transformation, and everything that has to do, of course, with growth and job creation, but also issues that have to do with peace and security and migration. And so we think that this crisis has shown that all these priorities remain very high on the agenda. And of course, we have to add up to that the specific fight against the health crisis and epidemic, and supporting the African economies, because I think it's clear that no one is safe until everyone is safe, and the world will make no progress if some parts of the world will be lagging behind. So this has to be a collective effort, and we are very confident that we can continue to work on a true partnership with our African partners. As using some words that Nina used, we know that we can count on them, that we can count on their incredible resilience. We can count on their very much on the fact that the entrepreneurship in Africa is so strong, and so we very much trust that the African youth, African women, African entrepreneurs will be able to come up with new solutions, with innovative solutions that will be help overcome the current crisis. And we are very confident that we can, if we can work well together, we will be better able to overcome this difficult period. Of course, that bringing the financial institutions within this effort is essential, and that is why for us also at the EAS it's very interesting to work closely together with the European Investment Bank, to listen to our colleagues at the bank, to see and learn more about this research that they are doing, because of course knowledge is the basis of progress, and if we don't have all the data that is needed, if we don't understand where we stand at a certain point, we will not be able to make any progress or any sustainable progress. So I think I'll stop here, because I understand there are a number of people that are here to have this dialogue with us, and so I will leave it back to you, and thank you again for this invitation.
Well, thanks a lot, Rita. Indeed, the political drive and importance of Africa is really needed. And I'm very glad with your preliminary remarks on the role of women, and then you also mentioned youth. But I mean, we know that especially if we want an active recovery, and also in times of crisis, women are hardly hit, but they are normally the ones that are strongest to try to also help this recovery. And I have to say that for participating in many meetings on financial questions, the banking world is unfortunately still highly dominated by men everywhere. So it's very comforting to see that we have women now that can address the challenge, and I hope that will continue and be more and more the case. So let me turn to another leading woman, Sandra Kramer. But you just switch off your camera so at the wrong time. But you're the director for Africa at the Director General for International Partnerships of the European Commission, in charge of both the partnership with Africa and to see how you can provide support. So what are the key priorities that you see there?
Thank you, Sam, and I hope you can see me and hear me now.
Yes, yes, very well.
Very good to be part of this panel. Ambassador, very good to see you, and all my panelists. Very good to be in this panel. I just want to first say thank you for the report. It's really helpful. We will use this really to calibrate our support to the private sector in Sub-Saharan Africa. And that's what we do in DG INPA, in my directorate, is Sub-Saharan Africa. I think that we should also reach out to my colleagues in DG NEAR who are doing the southern neighborhood, and this is very important for them as well. I very much like it. I think it is practical. Nina gave a very good introduction, so really a word of thanks. For us, it's clear. We want to strive for sustainable jobs and growth, and the private sector will be a main provider for both. And accompanied, of course, is regulatory environment, the right investments by the public sector. And this is at the core of the Africa strategy that we laid out in March 2020. And that was, of course, 3 days before the global pandemic hit. So the findings that you have presented on the viability of SMEs, the diminishing asset quality, which in turn prevents the financial sector to play its role in injecting liquidity into the economy, and the continuous insufficient access to finance are clearly for us a call to prop up support, as you said, San. So let me just make 3 points there. First of all, We really need to reverse the contraction of the sub-Saharan Africa economies, which is caused by the COVID crisis. Economies were hit very, very hard, and we need to ensure that recovery is quick and consistent throughout the continent. And this calls for economic diversification, for strengthening economic integration, and with the ambassador here, obviously, I want to mention the CFTA, the Secretariat in Accra, which is extremely important. It also calls for improved skills and education, and that's why you see us having a lot of emphasis on vocational training and skills. Green investments, sustainable trade are the main vehicles. And actually, this is also what Global Gateways is about. Global Gateways was the strategy that was launched this week by President von der Leyen, and this dedicates 300 billion in smart, clean and secure actions in digital, energy, transport, and strengthen also health, education and research systems. So it's really connectivity, both hard connectivity and soft connectivity, if you want. And we have in our actions, in our toolbox, if you want, already we're developing actions such as the Green Energy Initiative, or the well-known initiative for manufacturing access to vaccines, medicines and health technology products. That's something that we are taking forward currently with Senegal, Rwanda and South Africa, but I'm very sure the ambassador agrees with me that Ghana is on the immediate follow-up list. Then there's the strategic corridors that we're looking into for an enhanced and greener African connectivity. And of course, the digital economy and society partnerships. And then there's an Africa-Europe initiative for investing in skills for work called Youth on Track for Tomorrow. So all that is a package to really get economies moving out of this crisis. But secondly, we need to continue promoting sustainable investments in the region, both hardware and software, both working on the business environment and the direct facilitation for public and private investments. And the EFSD Plus is our instrument. And on the sovereign side, the EIB is our trusted partner. And I really want to underline that also for the EIB colleagues online, that this is a crucially important and strategic partnership that we have with the EIB. I will not dwell on EFSD Plus for a long time. I'm sure Maria will be giving examples how this works and how this will be addressed. Just to tell you that concerning the de-risking investments for the private sector, there will be a first call for proposals under EFSD Plus at the beginning of next year, as early as we can possibly make it, for proposals under 6 thematic windows. And they include sustainable finance, support to SMEs, connectivity, of course, Green Deal, cities and human development. So that is an instrument that we want to really highlight. Thirdly, very important to facilitate public-private dialogue. We need to take down barriers, unblock hurdles. We need a climate of trust, because that's what the financial sector needs. And here I would like to put forward the EU-Africa Business Forum. This is organized jointly by the European Union and the Africa Union. And this year, under the theme, Building Stronger Supply Chains for Sustainable Growth and Decent Jobs, it will take place back-to-back with the summit. You know the summit is scheduled for 17-18 February in Brussels. And just on the 16th and 17th, we put the Business Forum here in place. Partly physical, if that is possible, hybrid, of course, a lot of online solutions, because we just have to deal with what the virus is giving us for situations. Again, the EIB is a key partner in the organization of this, and this is an important policy dialogue for business representatives to meet key policymakers and to have a direct interaction, and that is crucially important. On economic integration, simply want to come back to the Continental Free Trade Area, which really is important for investment policy, competition rules, intellectual property rights, e-commerce, and we look forward to working very closely with the CFTA Secretariat and of course also with the Africa Union Commission in Addis, and both of course with regional organizations and bilaterally to bring that forward. On support to SMEs, you know, we have recently launched the Investing in Young Businesses in Africa initiative, and that supports financially and technically the creation, the early stages, seed, pre-seed of SMEs in African countries. It also has a business incubator project that has a total value of 23 million. And we really look forward to having that rolled out in a couple of pilot countries. So finally, I think really this report comes in very timely. We are programming, we are looking to see what the priorities are, of course, aligning with national development plans. And you mentioned digitalisation. I think we are indeed putting particular emphasis on that, fair digitalisation. And that is also what the report says about digital services and access to digital platforms. I just want to end with an example in Benin, where Team Europe, which is the European member states and the institutions, are working together on a very practical initiative on growth and jobs specifically for youth, which promotes digital banking and indirectly through interventions aims also to enhanced connectivity, digital literacy and digital entrepreneurship. So, Sam, let me stop here, but this report is coming very timely. It resonates perfectly well with our priorities, and I look forward to the discussion. Thank you.
Thanks a lot, Sandra, also for highlighting, you know, some of these structural changes and support that are needed in Africa. But perhaps if you just allow me, can you just get back to this? You know, Nina was telling us there is a crisis. I mean, we're in crisis, and though the financial sector has been resilient, you know, the question is how long can you be resilient? And so, what can we do to, you know, what is the you have outlined the kind of perhaps longer perspective, but what is the immediate response or immediate supports that can be provided to this financial sector now? What is the Commission preparing?
That is a good question, because all of what I was saying is on the rails and will be quite immediately available. This is not something we're planning for 24 or 25. We are putting the multi-annual indicative programs up for adoption before the end of the year. And this is all ready to be rolled out. But of course, we don't start now. We have been doing a lot, for example, funding of SMEs. I was traveling with the EIB, with Maria, together recently, and we launched in Zambia, for example, a very interesting project which with a commercial bank, where the EIB, supported by the EU budget, makes loans available to SMEs, particularly in the agribusiness, the food business. And there's a part technical assistance there as well to help these companies grow and help them also with that loan situation. So we're rolling it out as we speak. And that is something that I am sure Maria will also touch on. There's a lot of that immediate facility for SMEs available. So we're there, we're ready, and we're of course preparing also for the summit to underline this support even further. Thank you, Sam.
Well, thanks, Sandra. I'll get back to you, Maria, for more details. But perhaps first, let me ask Her Excellency Seo Butang, who is the ambassador of Ghana. And what is the perspective? I mean, how do you see it in Ghana? Well, what has been the experience of your economic sector of the crisis? How long do you think these SMEs and private actors can continue, and what can be done to strengthen the financial sector in Ghana and perhaps also more broadly in Africa?
Yourself. And I also want to acknowledge the female panelists and the astute diplomat as Rita is. She just wanted to let you know, San, that you're outnumbered. And we'll do a good job as panelists. As by way
to be outnumbered very often, that's a real pleasure.
So just to thank Nina also for the presentation that she has made. And as Sandra said, this report is timely. It's good. It will show us the way and also guide the banks as to how to support industries. My friends in EIB know how passionate I am with the bank's support to private sector, because that's the way for us to go now and to ensure that no one is left behind. And they should be able to pull much more people out of the doldrums that we are seeing now. Like you said, it's like jumping from a skyscraper and hoping that you will not crash land. Let me just say that there's been ongoing efforts in Ghana to ensure that trade and investment sees the needed transformation. And this is also the agenda of the Ghana Beyond Aid in a bid to improve the lives post COVID-19. I mean, we can't even say post COVID-19 because we are still in it. We still see the effects of the pandemic, and we're hoping that the private sector, the banks will stay resilient. Ghana's banks have stayed resilient because we did not record negative growth, even though we were hit, but we did not record negative growth as other countries did. And this is because of the sound economic policies that have been put in place. And this is what we hope that other countries will follow, because when the policies are sound and strong, the resilience will show when you have such crisis. Let me start by saying that Africa, for instance, the financial systems, particularly those in sub-Saharan Africa, apart from South Africa, though, they are dominated by traditional banking and informal finance. However, because of the extensive economic reforms that have taken place over the last 2 decades, there have been marked improvements in banking development, as well as emergence of non-bank finance, particularly in the form of stock markets, which have proliferated across Africa. I want to also note that following reforms, which have included interest rate liberalization and the privatization of state-owned financial intermediaries, Africa's financial industry has seen tremendous growth. And according to recent research, that's McKinsey and Company, Africa's banking sector is the most profitable in the world. And Nina did highlight that as she was ending on the happy note. So we must note that there's potential here. The banking sector in Africa, after Latin America, is the most profitable industry. And so therefore much more support should be given to it. And because you see return equity for more than twice worldwide, that is 9%. And we are also seeing, especially in Ghana and across Africa, the emergence of the mobile money industry, which is allowing more people to own accounts than in the traditional banking sector. And that has improved and has also empowered a lot of, especially women in the market industry. And this is another area that should be focused on. Now, the role of African financial sector in fostering private sector development across the continent, what should we expect? You see, without doubt, the financial sector is critical to the development of our countries. And if we ensure that we have a well-developed sector that boosts economic growth, it will lower poverty. And this is one of the goals that the AU Agenda 2063 seeks to achieve. And by strengthening the financial institutions and also regulatory and supervisory institutions, we will achieve the resilience that we are all looking at, and that we have some of our countries have achieved during this pandemic. I'm happy to note that the African Development Bank, for example, has created new direct solutions to boost private sector access to finance, such as microfinance capacity building. Then we have the Trust Fund and the African Guarantee Fund for SMEs, both of which were established in 2009. And then the African sector has seen a capacity building policy and advising the establishment of national and regional centers of excellence. And these are all part of the measures that we're hoping that we'll see more support so that it will help the human capital and skills development industry in the financial sector. Now, what should be done as well is also we must promote entrepreneurial development. Banks and other financial institutions must fill the gap by providing loans to firms, particularly SMEs, who require cash to establish and expand their operations in Africa. Furthermore, the financial institutions could also provide financing and support to various sectors, particularly in the private sector, in order for them to expand and progress in certain sector specializations. And then we need more training. Training must be offered through seminars. Now we do a lot virtually as well, and which will include special entrepreneurship programs for women and youth, especially emphasis mine, women and youth, and as well as a public-private sector dialogue to provide entrepreneurship. So how will the European Union and African partners work together to support sustainable and inclusive recovery initiatives, considering the COVID-19 pandemic? The fight is nowhere from over. As I have said, it's not done, and African countries need to recover quickly from the virus's consequences. And otherwise, we will see more problems that we are seeing now, especially the civil strifes and terrorism. We are hoping that we have, like I've said, more powerful policy responses which are required will be injected into our systems by development partners. They need to support us technically in this area. And then African countries should prioritize key sectors or areas needed to combat the virus and revitalize the private sector, like health, care, industrialization, information and communication technology. I know Sandra talked about digitization as well, and that was highlighted in Nina's presentation to us. And this is where we need to work more, and that support must be given to African countries. Now, for Ghana, let me come specifically. We've realized that tax reliefs and subsidies to businesses would help to help the private sector bounce back post-COVID. So Ghana, for instance, extended tax relief and extended the period for filing taxes for businesses. And this has helped for businesses not to register bankruptcy as seen elsewhere. And then we took the intentional initiative to build a resilient business environment to counter future crises like what we have seen now. And this can be replicated elsewhere and could be achieved by investing in the scientific, economic, and social research. This is where we don't get enough on the continent. I think attention has not been paid into investing in research and scientific and social programs. Finally, before I sign off, I would also like to state that we are Ghana, and I hope that other countries in the sub-region would learn from this, which is what we need. We believe in Ghana that we should not go into these programs or initiatives alone. If we pull ourselves together, we will have a much more stronger economies in the sub-region. So we are leading the way by establishing a domestic credit rating agency. And this should be established by second quarter next year. It is expected to promote the credit culture and the risk-based lending and equitable pricing of debt instruments. And this will reduce the information asymmetry between market participants and help to facilitate investment decisions in country and hopefully in the sub-region. And then we have in the budget read just 2 weeks ago in Ghana, the finance minister announced the U-Start. This is expected to be operational in March 2022, and this is an ambitious private sector growth strategy, which will be anchored on a revitalized financial sector through Development Bank of Ghana and the conversion of the Ghana Amalgamated Trust into a permanent investment vehicle. It is the hope of government that this initiative will strengthen financial institutions and restructure companies in the hospitality, education, and export-oriented industries, which is what we need now. And finally, SAN, the revision of the flat rate and value-added tax system. Government of Ghana has decided to extend the VAT relief on African textile prints for textile manufacturers for another 2 years. This is because this is an industry which is which has potential, and if this support is given to it, it does create jobs and will also help, especially women who are in this sector, to stand firm and realize their profits given the crisis that sector has hit. So with these few words, I want to thank the EIB for this initiative, and also I want to use this opportunity to thank the European Union and for the support given African countries during these very difficult times. All is appreciated, and I know that EIB is doing more to help the health sector going forward. So the effort is appreciated, and we hope to all come together for the good of humanity. Thank you very much.
Well, thank you very much, Ambassador. I know that you have a lot of commitments and you're due to leave before the end of our meeting, but thank you very much for sharing your views. And if you allow me, what I especially liked is that when we're talking about the financial sector, you have been able to go from the micro perspective of the informal and small businesses that need to get their loan, and make the connection to the general policy environment and fiscal regimes and regulatory regimes and the development of also a public development bank in Ghana and so on. And so you have been able to put it into the macro context, which shows both the complexity of course, of the approach, but the need to have a multi-pronged perspective. So thank you very much. And also for stressing the role of women. By the way, I'm outnumbered also at home and quite often at work by women, and that's perhaps why I can be so effective.
That's what
good examples.
That is what has made you a very intelligent person.
Thank you very much. Let me turn to Maria. Maria Shaw-Baragan, you are the Director for Global Development Partners at the EIB. In fact, you're really a development banker with a vision, I have to say, and at the same time, a vision and very strong operational focus. So that makes you a very unique person, perhaps. People are normally more one or the other, and that's probably why you're one of the leading figure in development banking in the world. and definitely in Europe. But let me turn then to this range of challenges that you have as the, at the EIB. How can you both provide these supports, in what was mentioned, perhaps more in the short term, to ensure the resilience continues and that there is not a crash that I was talking before, and at the same time preparing for longer term recovery of the crisis and trying to build back better?
Thanks very much. Thanks, San, and thanks very much for those very kind words. Let me also start by thanking those that have organized this event. They are colleagues of mine at the EIB, and they have done a wonderful job. So, they're all behind the screen, and some of us are on this side of the screen. And I do want to congratulate them for this event. I want to thank my fellow panelists. It's a pleasure to be with you. Unfortunately, only on the screen, but I've seen one or the other of you lately, and I am going to have the honor to welcome the ambassador next week when she's coming to here in Luxembourg to the EIB. We're going to be signing a loan from the EIB to Ghana for health resilience. But I also want to thank the audience, because the reality is we know how difficult it is to maintain attention in these virtual events. And we have many of you that had signed up. We were really proud, and it gives us energy as panelists. So I want to thank you for your resilience as well. And I salute all of you.
Thanks, Maria. Now down to the...
I know, but I want to, there is a lot of fantastic people that are listening to us. The report, it's really a worthwhile report. I do recommend that you read it. I can confirm to Sandra, we have shared it with all the EU ambassadors in Africa, also in North Africa. So each one of them received the link to the report. It's all very green, so no paper movement. And we also share the summary with each one of them, because we do think it can help in the discussions that each one of the delegations is having about private sector engagement, involvement, and growth. And you all know that the EIB is very much engaged with the local financial sector. And then now I come to San's question. Why and how are we doing this? And why does it make sense, and what is needed right now? The why has been very much explained by Sandra and by Rita. It's all about creating jobs. It's about sustainable growth. And the ones that are making this happen is the private sector. And it is from the micro to the small and medium-sized enterprises. And what they need from us is that we support them and that we provide that finance. And then how do we do this? It's not the EIB. It does not make sense that we are the ones that are coming and lending to a micro entrepreneur or to small and medium-sized or medium-sized enterprise in Africa. So we do it working in partnership with the African financial sector. They are the ones that we need to be strengthening. And here, the ambassador was also very clear. What it is about facilitating access to finance. This is in the strategic orientations for EFSD+. It is one of the 3 key pillars. It's about jobs and sustainable and inclusive growth. And that's where then the EIB's action and those of other members of Team Europe are very much ingrained. Of course, access to finance is also about the Green Deal, and it's about global gateways, but it is very much about job creation. And this is important if we look at it from the African point of view. What do Africans seek is they want a future, they want a job, they want an income, and they want to contribute to their own economic growth of their countries. So in this key partnership with the local financial sector, with whom? And then it's the microfinance institutions, it is with the private equity and venture capital funds that are active in the region, and it is with the banks, with private banks, the majority of them are private banks, but also engaging with the public promotional banks and with the sub-regional development banks of Africa. So engaging with the whole system to create more resilience in them so that they can support the economy. And here it is very important that we engage with a very diverse set of counterparts. And we really look at this as a strategic partnership for us. It is, we know about banking, they know about banking, and how can we work together and deliver better? So what kind of instruments can we bring forward? We clearly are supporting with equity, particularly equity for microfinance institutions and in the venture capital or private equity sphere. The second part, and the ambassador was very clear, they need cash. These SMEs, what they need is cash so that they can invest and grow. And therefore, what there needs to be is liquidity. And this liquidity needs to come with volume and ideally lending to several commercial banks in a country so that we create competition amongst them that can only benefit the SMEs. It has to come with longer tenors. One of the elements in the analysis of the report is the tenor mismatch. Many banks in Africa are financing themselves with deposits, and these are short term. So it is difficult for them to do that transformation and lend longer term. So when institutions like the EIB and our peers can lend longer term, we are helping for the strengthening, the resilience of the financial sector. Third element is lending to them in local currency. If we lend to them only in hard currency, we are creating strains in their balance sheets. While local currency, or a combination, depending on what kind of clients they have, what kind of income they have, is the right way. So these are the instruments that we can put in place. Then I do think we need to have multipurpose loans, but we also need to have themed loans. Those that are targeting the sectors where we see that they are underserved and where we want to see more lending specifically in those. And here I'm thinking of the agricultural sector, for example, agribusiness, because this is a major creator of jobs. And as Nina has very well indicated, it is one of the areas where sometimes financial institutions are a bit reticent to come into this sector. So that's one, but also loans that are themed about green investments, about energy efficiency. So not only about renewable energy support, but energy efficiency that can affect a very wide part of the economy. And within the themed loans, very importantly, loans that are dedicated to women entrepreneurs. Here we use the 2X challenge criteria. It is women in management, women as the owners of the company, or women as the main beneficiaries of the products or services that are produced by these SMEs. And these criteria, it is important that they are shared with all other of the peers, which is the case with the 2X criteria, so that then we can report and explain what we're doing together. And the last extremely important point where the European Commission's intervention is essential is in risk sharing. So de-risking. If you can accompany a loan with a guarantee whereby you're telling your financial institution counterpart that if they take more risks, we are going to share the risks with them, and then we have the backing of the European Commission behind, then we can create the incentives for more risk-taking. And this is one of the elements that we have seen that in the COVID crisis, as the economic situation was worsening, banks were retrenching and being much tighter in the risk that they were willing to take. So these type of products are what we are already using. What are new products for the future? Trade finance, clearly, because this is one of the elements that can support the global gateway approach, and therefore it will be one of the ones that you will see deployed more widely. Capital market instruments to facilitate that there are others that are investing in Africa as well, and support to the digitalisation of banks. And here again, the ambassador was spot on explaining how this can create more integration and a wider service by the banking system. Last, in terms of how to engage with financial sector partners, is everything that has to do with capacity building and technical assistance. Here it's not finance, but it is a major intangible support that we can provide. I'm talking about training for employees of banking institutions. I'm talking about helping them to develop strategies so that they can have specific products that are targeting women entrepreneurs. so that then they will have a wider set of clients that are women entrepreneurs. And at the same time, that we can, through these banks, provide capacity and financial knowledge for the women entrepreneurs so that they are better equipped to then present their business plans and defend their case when they are confronting the bank staff. So everything that has to do with financial inclusion. Another big area in terms of capacity building is green finance. How can we create more knowledge, more capacity in financial institutions in Africa so that they are better equipped to lend in the green sector? And including on climate risk, which is, they are very well equipped, and that has been showed by the fact that they are very resilient in the financial crisis. They're well equipped for the analysis of credit risks. But what about climate risks? And these ones are those like hidden risks that are very much often ingrained in their portfolios. And the last point with capacity building is working with central banks. This is extremely important as well. And here, sometimes we're working with IMF, and our economics department is very active on this. Together with IMF, we also developed a training, an online training that we make available to all our clients, but also all those that participate in banking academies that we are supporting, so that they can have, and this is a long-term investment of people. It is really over a number of months. It's a really serious training with a certificate at the end that we have developed with IMF. Let me, before I conclude, San, I wanted to mention a few examples specifically.
Please do conclude, because we would like to have, if possible, some questions and
I know, but I want to mention Ghana because, you know, we had the ambassador. So in Ghana, just to say, to bring this really to the reality, we're working on microfinance. We are working with many commercial banks in Ghana, and this point of creating competition, I think, is very important. And earlier this year, there was a loan from the EIB to the government of Ghana for the National Development Bank Ghana. This is a loan of 170 million euro. It's very substantial. And here what we are doing is supporting the creation of the own public promotional bank, so that Ghana is better equipped to support job creation, agribusiness, manufacturing, ICT, and the sectors, the services sector. So what the ambassador was talking about. So let me just conclude by saying that this is a crucial part of our activity. It really is fully within the policy-first approach that both Sandra and Rita have been presenting. And ultimately, it's always about creating smart, inclusive, and sustainable growth, working with partners on the ground. And I'm happy to now move to the next session and questions.
Okay, thank you very much, Maria. Sorry, but I mean, we do have a lot of participants, and let me remind you all that you can ask questions through the Q&A function, and I already see several questions coming in. So please do not hesitate. And now you had a chance to say what you wanted to say. Now we can ask you plenty and grill you with plenty of questions. I mean, both Sandra and Maria, you mentioned the global gateway that has just been announced by the Commission. One of the questions is where the money comes from, and there was this issue of perhaps an additional 750 million euros additional money. Sandra, can you tell us a bit more?
Thank you. I saw that question, and that was exactly the question that was asked and also addressed specifically at the technical briefing that we had before President von der Leyen announced the global gateways. So this is, of course, already answered. I will just refer you to the extensive information that we have put online, a press release, a Q&A, and it is, of course, very much there, where we see where money comes from. I must underline, this is very much a Team Europe approach. This is the EU institutions, member states with their financial and development institutions, the EIB, the EBRD. So it's everything together. And that actively then seeks to mobilize private sector finance and expertise and support access to sustainable finance. So it is in total a mobilization of 300 billion, but this is explained and was already addressed to the question which Vince also asked at the technical briefing. So let me not go over that again. It is asked. And then there is, of course, the opportunity for you, Vince, to very briefly also ask our commissioner, because I hear that you're having a interview with her. But I think what is the most important really in all this is that we are putting forward that global gateways approach as very much a value-driven approach, an offer for quality, for standards, for transparency, and for good governance. And that is something that is really at the heart of what the Global Gateways is all about. It's really taking the twin transitions, I think it was said before, the green transition and the digital transformation to our global partners, but in a way that is, as I said, value-driven with quality and standards upfront. So that is at the core of it, Sam.
Okay, thanks. I was not at the briefing, so I didn't know the question was already asked. Perhaps let me turn then to the second question, which was about turning to the EIB, about how the EIB can contribute to the global gateway. In fact, I don't want perhaps to have a repetition of, I mean, the EIB is following the policy first and what the Commission is, the priorities of the Commission. But perhaps let me ask you a more generic question. I mean, the EIB also is going to set up a development branch next year, so trying to do more. But when we just hear the amount of needs that are in Africa in terms of the financial sectors, but also more broadly, and the level of ambitions of Europe, I mean, isn't there a case for European member states to beef up the EIB capacity to operate internationally and to provide perhaps more guarantees or more ability to leverage and to meet all the expectations that are put on you, Maria?
That's a very tricky question to ask me. So we are owned by the EU member states. We will do whatever they want us to do with regard to the activity outside the Union, and in particular, accompanying the external action of the Union. And for this, it's all under policy first, so we will follow the priorities. What we have seen is a very strong backing for the EIB in the NDICI Global Europe regulation. So the role of the EIB as the only financial institution that is owned by all member states and only by member states is there very well recognized. There's no question about that. It is also very interesting to see.
Let me put it, just if I can then put the question slightly differently. There's a question of capacity, and some have also said, there's a limit to what can. If there was more, more capitalization or more means given to the EIB, would you have the capacity to do more in Africa? And more globally.
Yeah.
I mean, here we focus on Africa.
No, it's a very, very fair question. We see a lot of demand. The demand is huge. So the absorption capacity for the type of lending that EIB is doing in Africa and also in every other region globally, there is much more absorption capacity and much more demand. So with more means, we could achieve more. The question is, what do Europeans, as from a political point of view, want us to do, and how, as Team Europe, because that's also extremely important, we are one player in Team Europe, how together we can do more. And I think for this, and I really, it's not because Sandra is here, but I do think that the EFSD guarantees are the way for this. That's how each one of us, we can mobilize more, because we will have this backing thanks to the EU budget and the NDG guarantees. And I've noted also there was a bit of this question, and I appreciate Sandra said that EIB is the privileged partner for sovereign lending, because for sovereign lending, there's a special window for the EIB to be doing the lending. In the rest, for everything that is private sector, we will continue to be extremely active, and we will be using open access. There is an open architecture, and the EIB is very well equipped to be a major user of open architecture, like we have done up till now. We have been a good user of blending, and in the end, the biggest user of the predecessor EFSD. So we will continue with a big activity in the private sector, and in particular, big activity in the private sector in Africa with the products that we've been talking about, but also in digital and in health. You're going to see us very active, in addition to, of course, everything that is sustainable energy, access to energy, but also supporting Global Gateway in every other region in the world. Because Global Gateway is not only about sovereign lending, it's about engaging the private sector.
Great, thanks a lot. We have questions from our friends from the African Development Banks making finance work for Africa that are themselves extremely active and really leading also on how to stimulate investment and finance in Africa. And they're asking the question, what are your views on what should be done to create the conditions for green finance to flourish in Africa? And I guess that's not perhaps just to the bankers, but perhaps also to the Commission or EAS. So I don't know who wants to take that up. Yes, Sandra?
Glad to say a word about that, because green financing is absolutely key. By the way, you were, of course, right that the EIB is following policy first principle completely, and we are in continuous touch with the EIB and with others to do that. But I think for green financing, you need very credible tools, you need frameworks, you need standards. We announced in July a comprehensive strategy to help increase sustainable finance in low and middle income countries. That is a first step. But to channel private capital to, for example, green projects in our partner countries, promoting financial instruments such as maybe green bonds will also be key. And it still represents really only a very small percentage of what it is that we think we can do. And I think that notably for African countries, there is a large untapped potential in this area. So I can tell you that we are currently exploring ways to support our partner countries in developing and scaling up of green financing and the green bond market, also through the EFSD Plus guarantee. But what's also important there is technical assistance to our partner countries. And several speakers came back to that. That really is something where we support also the frameworks, the pipelines, the projects, the linkages between local projects, entrepreneurs, and global investors. That is a very important sort of bubble which needs to work for that. So that's very briefly from me. And if I may just add one thing, Sam, before I will leave you, is that focus on access to finance and focus on liquidity, which we've discussed a lot, is very important. Align the business and investment climate from laws to start.
Perhaps we have a problem of connection, Sandra. Perhaps just switch off your camera. Just switch off your camera and perhaps make your comments, then we might hear you better.
So I don't know where I got cut, but
you just said you had the last comment to make. So before you, because I know you have to leave early, you have another meeting. You said you had the last comment, and that's what we didn't hear.
That is that we need to pay not just attention to the liquidity, which is a problem, but also to the business and investment climate, to the laws that govern. There was a very good, of course, the Doing Business report of the World Bank, really from the startup of a company to insolvency laws and anywhere in between is equally important in this story. That was what I was trying to say. I'm sorry for the bad connection. Over to you.
No, that's perfect. We heard you perfectly loud and clear, and that I think is the most important. I know you have to go, so thanks a lot for having been with us during this discussion. Perhaps we can go to the question on fintech, which is, how do you think fintech is going to change the landscape of development banking and finance in Africa? And is it going to lead to more inclusive economies in Africa? And what can we do to promote that? Perhaps Nina, you want to
yeah, sure, Sam, thank you. So, as I said already, I think we see a lot of opportunities with digital finance to boost financial inclusion. And I mean, digital finance essentially boosts financial inclusion and indeed also can boost access to finance for firms, although we haven't seen that as much as the boosting of financial inclusion at an individual level? There's basically two reasons for that. So one is that it's something that can be physically accessible over a wide distance, right? Anyone who has a mobile phone can really access it. And the second one is it brings down the cost. And, you know, one of the barriers to giving access to finance to, you know, very small entrepreneurs, people in rural areas, small firms, is just the cost. You know, you've got a high admin cost of doing that. And if digital channels help to reduce that, then that's something that can really, I think someone in the questions used the word democratize, and I think that's exactly it, right? It can help to democratize access to finance, so we can include some of the smaller firms, some of these groups that have been excluded. I think it can also have broader positive effects on growth and development. For example, you know, one of the things it can do is it can start to bring small firms into the formal sector. You're starting to get financial transactions that are going through, you know, a recorded channel. And that's aiding transparency, you know, that's helping to develop the financial sector. It can help, you know, with governments often want to try and track these financial flows, so eventually they can improve tax administration. And it can also help financial institutions become more efficient, improve their service delivery to be more targeted. They know more about their customers, and it can help them. You know, we've just seen this huge crisis, and one of the biggest problems really from our side was getting information, right? And I think a lot of the banks and microfinance institutions on the ground were really struggling. They wanted to know how are their clients doing, and digital channels can help them to do that. So I think there's really a lot of potential there, and it can make things more inclusive. I would say that it's not just fintechs, right? So I hear a lot about fintechs, and it's a very exciting sector, and you know, it's something that we've been supporting at EIB via support to venture capital in particular, and you know, that has really driven increased financial inclusion. But for me, digital finance, that's a tool, right? We use digital tools to achieve a goal, and that can be done by fintechs, but there's also something that's being taken up, I was saying also in the presentation, by banks, by microfinance institutions. And I don't see this kind of picture of, you know, fintechs are going to make microfinance go extinct. I think, you know, of course, there are going to be some cases where microfinance, maybe one that's not serving its customers too well, is outcompeted. But I think on the whole, they're offering quite different services. And, you know, for instance, fintechs have concentrated a lot on consumer finance, you know, at an individual level. And it's still the microfinance institutions or the banks that are really leading on investment finance. And there are a number of reasons why fintechs aren't going to take away that role, right? One of them is that they're not regulated to do so often, right? They would have to change their regulation, so they would have to become more like banks or microfinance to do that. And the other is that they just don't have the skills and the expertise yet, right? So, you know, microfinance institutions have built up a lot of experience in the sector, and they know how to reach the clients. They know how to work with the clients. They know how to assure things like client protection is something that's really important. So I think I would see as it goes forward, the banks and the microfinance, they're going to take up more and more digital channels. I think it's clear that they're going to have to do that to serve their customers. In some cases, they might end up partnering with the fintechs because the fintechs can do things that they can't. In some cases, they're going to do that in-house. And yeah, I think they're going to coexist. And of course, I mean, Maria can say more, but I think at the EIB, we are led by our objectives, right? And we will work with and support the kind of institutions that help us to achieve these goals of financial inclusion and reaching out to SMEs.
Yeah, thanks. Perhaps I don't want to open the Pandora box, but can you say 2 words about cryptocurrencies? Would that change development finance fundamentally in the future? Perhaps just a yes and no. I don't want, or in one sentence, I don't want you to get further. But for those of like me who do not really understand, but read in the news that it could be a game changer.
Okay, so I think cryptocurrency is there, and it's there to stay, and it's something that I know, you know, I'm not an expert in this field, right? But I know that it's something that EIB is already engaging on. You know, I was actually Googling this a little bit in preparation for the panel, and I saw that EIB has worked together with private banks to launch a digital bond using blockchain technology, right? And in Africa, you know, it's still a small market for the cryptocurrency, but it's the region in the world that's taking this up faster than anywhere else. And I know, for instance, Nigeria recently launched its e-naira. Is this going
Okay.
to
Yeah.
completely revolutionize things? I think to me it's a little bit, it's another tool, just like we were talking about digital, and I think it can help to make the sectors more, it can help to make the sector efficient, it can help to drive down costs. It's been taken up a lot for remittances transfers because, you know, it can really in the past the costs there have been very, very high, so people are very keen to jump on this crypto. But I don't think it's going to completely change the sector because there's a lot of risks attached, right? So I think regulators are looking at that, and they're thinking about ways in which they can make sure that they reduce the risk both for themselves at a macroprudential level and also for the people who are using it, right? I think, you know, this is something I have no idea about crypto. I wouldn't know where to start, you know,
Okay,
and
well,
I
we
think
should organize perhaps EIB should organize perhaps another specific. I didn't want to launch another
no,
one,
but
but
what
of
I
course
mean
we
is
could
that I
talk.
think, you know, if people like me are going to start investing in crypto, we need someone to be there to making sure that we are informed properly, right? And that the terms and
Absolutely.
conditions are transparent and that we're not vulnerable, you know, to fraud. So I think because of that, the regulators are going to start, you know, regulating, which is their job. And for that reason, I don't think it's going to be a complete game changer, right?
Good.
Thanks.
Let me turn perhaps to something a bit then more pragmatic. Maria, you mentioned the local currency, you know, the importance of local currency. In fact, it is surprising to think also in the European ecosystem, most of the financial institutions cannot lend in local currency. So the EIB does lend in local currency. Can you tell us what are the type of products and cooperation that you see that you could promote in Africa?
Yeah, thanks. It is complex. It's complicated to lend in local currency. The way we do it, and it is designed to facilitate life for the beneficiary. That's why we do it in this way, is that we provide a financial product that embeds a swap in the loan so that we bear the currency risk for our local commercial bank. We bear the risk for them. To do this is complex. It's important to have a portfolio so that you can have several currencies and play with one and the other and try to have diversification. And also, just to be clear, we do it synthetically. But you know, beyond this, to go into much more detail, I think we would lose the audience. It's important that it is available, and it is important because what it does is it takes away this burden from those that are in the front line, that most of their income and all the loans that they're going to be doing are in local currency, and otherwise would have a major mismatch of currency in their balance sheet. So it is a way to facilitate the lending, but also to not weaken the strength of the balance sheets of our partner financial institutions.
Thank you very much. And there's also, we're very lucky, we have Afsat Abiola, who is the president of the Women in Africa Initiative, that is with us and was saying, you know, she would like to have access to you, Maria. So there's a question there, if you can perhaps connect afterwards. But I think there's a strong interest in trying to see what you could be doing together. Also, perhaps you mentioned the 2X challenge in this context of women empowerment. So it's great to see this interest there. Let me perhaps turn to broader considerations, also in the way that Europe is engaging. I mean, in a sense, there are many actors that are in Africa and are trying to support Africa, and you know, there is very soon a new forthcoming summit between Africa and Europe that is due to take place mid-February. And partnership, and there's a question about the geopolitical, competitive, and international environment in which we are, and what is the value added of Africa, of Europe for Africa, and is the question, and then I'll add that myself, is the question of trying to you know, to promote financial markets, but also you know, research institutions. which are perhaps more Africa-led. Is that something that could be value added for the EU in this partnership? Sorry, I turn to Rita for this question, more political question.
Well, certainly there is a value added in turning to our African partners more and more in a wide ranging areas, because this is the partnership has to be co-owned, and of course we need to interact in all sectors, and to interact, of course, with our African partners. It's exactly the purpose of this partnership, and the fact that we very much insist on the fact that it is a partnership among equals, is that we, of course, in Europe can indicate which are the ones that we consider that are the important priorities in our relation, but we of course need to know from the Africans, and which are the sectors that are considered more relevant for them, and which are the priorities that should be set. In that, of course, the work of the research institutions, the think tanks, is very important, because they can bring together African researchers with the European researchers. That can make suggestions that that are not only the suggestions that are made by us, civil servants and politicians, but that can reflect better what are the concerns of African societies, and that is, of course, very, very important. And indeed, we do need that the African financial institutions can take a lead in, for instance, you've mentioned the preparation of the summit, and that is we hope will take place next February. The leading actors on financial institutions in Africa, of course, very much in the lead of these discussions, and people like Tijam Tiam is very much involved with all his experience on the financial institutions, is supporting us in finding the best way to find the proposals that can be game changers, and that can support Africa in this particular moment in which there is a strong need of more financing, and so that these projects that are there, that everyone knows that are essential, can be become concrete and can be put into place. So all the time reaching out to our African colleagues. This cannot be, Europeans discussing among Europeans about what are the best solutions. Absolutely on the contrary. And now that the Ghanese ambassador left, but it is important also that in these panels that you not only look for female participants, but I think that it is that we would open up to more and more African participants, because it's essential that from the start we get their opinions. And I'm happy to know that we have in the chat, we have identified, for instance, the representative of this African women entrepreneur. Very happy to know that she's there and she's listening, and hope that there are many more, and that we can interact with all of them.
Yeah, since we talk about just this lunch dialogues is organized by the EIB, and so the EIB is one of the center. Could we think about some kind of alliance that could exist between African financial institutions and European public financial institutions? And I know, for instance, the next Finance in Common summit next year will be co-hosted by the EIB, or African Development Bank. So could we imagine that you could play a key role in harnessing some other public development banks together and form also, as part of the partnership, some form of alliance? I don't know if it's the question is both political, so to Rita, and to also practical, so perhaps to Maria, or I don't know who wants to pick that up, and we have to conclude. So
I know that Maria has a very political mind, so she can mingle both the more financial and the political answer that I'm sure that the one she gives, I'll agree with her.
Well, I'm happy to say I would love this to happen. San, really, I would love it to happen. There are many interactions between us, but this idea of an alliance, I think it would be very powerful. Also because we have to learn from each other, and both ways. Yeah? And local development banks, the sub-regional development banks, they have a knowledge of what is the reality on the ground, what is feasible, where the needs are, that some of us are necessarily going to have less. So to create such an alliance where we can exchange and grow together would be a very good thing. And if I may, it could very well be one of the outcomes of the African Union, European Union Summit, because it would benefit everyone. And then we can jointly benefit the target population, which is what we are here about. So I think it would be a fantastic idea.
Great, thank you very much. Well, thank you to all of you. Perhaps, Deborah, you want to formally conclude this roundtable. Thank you all for all your questions and interactions. And always sorry we don't have more time, but this was extremely instructive. Deborah, you want to say final words?
I just wanted to thank everybody. It was a really fascinating discussion. Thank you very much, and looking forward to have soon another opportunity. Thank you.
Thank you very much.
Thanks
Bye.
very much to everyone. Bye.
Bye, thanks.